Hey guys, welcome back to another weekly brief with Kenny Simpson with the Simpson team. This week I wanted to talk about interest only on investment properties. I recently posted about this. You'll see it in the body of this email. So 1 to 4 unit investment properties, interest only. Why am I excited? They can go to 75% loan to value, which is huge. So a couple things to keep in mind. Interest rates obviously going to be a little bit higher than principal and interest. We're going to be offering 5 and 7 year ARMs. They have 10, but the best price you're going to look at is 5 and 7 years. Rates are going to be in the 5s. Like I mentioned, 75% LTV. You do have to qualify at a 20-year AM at 2% higher because it is interest only. So if you can qualify, you'll definitely save some money on the payment, help out with cash flow. Also, this week I wanted to talk about interest rates. Interest rates are kind of, they're just a little bit, it's like an up and down, eighth here, up, down, eighth here, up, down, eighth here. Not much going on. I'm not sure if we'll see a decline in interest rates. Obviously, they were higher about a month ago when the Fed released its last 75 basis points hike. I'm not sure if we're going to have that same volatility coming up next week. But mentioning the 75 basis point hike, that's something else I want to talk about. Fed meeting is next week. We're expecting 75 to 100 basis point hike. I'm not sure if the market already priced it in. I'm not sure if the mortgage-backed securities, the treasuries, all that have priced it in. If not, we might see some volatility in rates. I would recommend if you like the rate, lock it in. I would not wait. Last time we saw rates increase significantly. I think within a week they went up anywhere from a half a point to 7/8 in rate, and then they ticked back down. So a lot of people got logjam there, locked in, and either you did a float down or had to go to another lender. So keep your eye on that. Also, speaking of inflation and Fed raising rates, they will raise July. They go on summer break in August. Yep, they do not work for a month. Lucky them. And then they'll come back in September, and they're projected to do another rate hike. So we will have August and September CPI numbers out by then. If we do see a dramatic, decline, maybe he will not raise them. But I am expecting July raise, September raise. That's probably the nail in the coffin. That will do it for us. Also coming out by the end of this month is the GDP numbers. First quarter was, I think, negative 1.6. Second quarter, they already came out that they're thinking it's going to be negative 2.2. If that is the case, we will technically be in a recession. So that means technically we are in a recession. If that gets out there, you're going to start seeing more of the R word, social media, news stations, all that. It's going to be the talk of the town. Obviously, if you're around a dinner table, everybody's talking about interest rates, inflation, real estate market, all that. What are we seeing in the real estate market? Week over week, we are seeing more inventory and things like that. So this is becoming more and more of a buyer's market. If there's anything we can help you out with, please let us know. Otherwise, have a great week, and we'll check in with you next week.